Welcome back to Around the Table with Stacy Smith. We're talking about investing in the economy. We're talking about bonds right now. We're going to get into the housing market in just a second, but I wanted to follow up this with all of you, and that is, if you happen to have one of these bonds that you may have purchased a couple of years ago and was paying at a much lower percent, and the price has also declined, which is why people have been hurting if they own these particular bonds, have you advised your clients just to hold on to those? Do you sell them? What's the best advice going out there right now? Or can you even speak of that?
Well, yeah, we can speak to that. There's two parts to that question. There's the investment part and there's the tax part. It may make sense to sell a bond to take a tax loss. It makes no sense to sell a bond from an investment perspective today because now they're low.
Okay.
So
Everybody.
I'll add to that. It's a very interesting question. And as Frank just said, we have been able to tax loss harvest a lot of our bond positions. However, where we go with that money in many cases is right back into bonds, because just like with anything else, you don't necessarily want to, you don't want to sell it when it's low, especially if we're going into a recession. And as Michael had pointed out, we've already started to see a recovery with the bond market. So the question really is what types of bonds? And Frank had mentioned earlier, coming out of the 2008 recession, this issue of asset allocation, we've always owned bonds, always, because we can't predict when interest rates are going to go up and how much. So we've always had bonds in the portfolio. The question for another day is what types of bonds? So what types of bonds can we own that maybe are sheltered a little bit more from interest rate increases? If we had listened to the masses back in 2011, everyone was predicting bonds are going to collapse. So for our clients, we have to have a place to go with their money. We can't put all of their money in the stock market. So knowing which types of bonds, what maturities to own, there's all kinds of things, what credit risks to own in order to help shelter our clients. We at our firm don't use much in terms of alternative investments because I can't model it. I can't look at an alternative and say, if we have inflation go up or interest rates go up, how is that going to perform? And for us, we're predicting cash flows for clients. So it's tricky. It's not so straightforward to say if you own a bond and it's gone down, do you sell it? Because it's just like anything else, there will be some recovery at some point along the way.
As far as alternatives, since you brought them up, alternatives are generally illiquid investments, which probably eliminates 90% of the investors out there, because most people need the ability to get to their money at some point in time because of life happens.
Yeah, but after 2008, I guess it was 2008, we saw a whole deluge of liquid alternatives come to the market in terms of, whether it's long short funds, managed futures funds. So, I think we've had a lot more questions about liquid alternatives because this is the 1 year that they've actually been, doing well in the last several.
Michael, I'll throw this one out to you, and we only have about a minute or so left here. You've done some research on how markets will recover after a recession or a drop of 20% or so. Is there any research on bonds recovering since this is such a drastic decline?
Not that I recall, because this is a once in a lifetime, at least in our lifetime, instance on that. So the data set, probably the sample size is very, very small. I think Carrie really hit the nail on the head in terms of most investors probably don't know how many different types of bonds are out there and how many different ways there are to invest in fixed income like investments, whether it's corporate bonds, treasury bonds, mortgages, agency, non-agency mortgages. I mean, there's a plethora of different investment alternatives out there in the fixed income realm to generate, whether it's generate income or generate safe and stable income that might be a little bit lower than what you can get in a high yield bond market. So it is imperative to do your research in terms of really trying to understand where you want to have your fixed income allocation placed in this type of environment that we're in right now.
good advice, and we are out of time, but you set it up that we will have to delve into this more at some other point, and that is the different kinds of bonds that are available out there. There's a lot more to discuss on how to manage your portfolio, and we'll do that in the upcoming sessions. I want to again thank Kim and Frank and Carrie, and especially you, Michael, for joining us, sitting in for Bob Fergasso. Hopefully he'll be with us the next time we gather. And we hope that you join us again for the next edition of Around the Table with Stacy Smith.